What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William for today, Tuesday, September 21st. As always, guys, I usually end the videos this way, but I do want to just first and foremost thank everyone that tunes into my videos. I do sincerely appreciate each one of your guys' views and likes, as well as your subscription. Again, the whole purpose behind producing content is to better inform people and to better educate those that want to learn. But at the same time, help the community better established essentially in the messaging they're getting. Because again, you can, depending on where you go source information, you can get a lot of different messages. So again, the point is to be consistent, number one, reliable, and resourceful. So as you guys can see from the indices map, we'll get into it. You see that today was a little bit of a mixed bag, but a little bit of a dead cat bounce at the same time. For those of you that ever heard of a dead cat bounce, essentially that is when the market essentially starts to dip and then has a bounce back up to the upside. Don't ask me why they call it a dead cat bounce. I swear I'm not making that up. That is 100% legit. It is called a dead cat bounce, but essentially that is what you see today in the market, specifically looking at all the indices, right? Some of the major players had a little bit of green days, Teslas, the Googles, the Microsofts, like we always talk about. But specifically for us in the Russell 2000, as you guys see, it's a lot more mixed, right? Looks like healthcare, information technology, and real estate probably were the most green. Everything else would look pretty red for the most part, probably 50-50 if you had to break it down, right? But as you did see from the chart, on the left you see the SPY. Let's make these a little bigger so they're clearly visible. S&P 500, you see this massive dip down to the downside. We did have hitting the 100-day moving average, which had a lot of people scared because of this whole Evergrande thing out of China. On the right, you have the Qs, right? And as you see, they also had a dip down, which again even terrified more the market, specifically because the Qs actually just had a correction essentially, or pullback, if you guys remember, back in May, which is signified right here, where you see that they dipped down to the 100-day moving average, bounced off, and continued on their climb. S&P 500 has been more advantageous. As you can see, literally this line is goddamn near almost lateral straight up. A little bit of pullback here, right? But healthy pullbacks are always needed in the market. When they get too extreme is when they scare people. But yeah, we do still have the whole Evergrande thing going on out of China. Funny enough, I remembered something that I watched a while back. You guys might find interesting, depending on where you consume your news media. I'm a big consumer of Vice News. Vice, shout out to Vice. A couple years back, I want to say it was like 8 years back, there is a report they did out of China, which I thought was super fascinating, of China's ghost cities, right? So what that report essentially, I'm just giving you a summary. I'm not actually quoting out of their article. I'm not trying to do copyright infringement or anything like that. But essentially what they were talking about is how China, to produce a high GDP, to maintain that second strongest economy in the world status, would build literally cities that were ghost cities. Like there was nobody there, like no one. And the prices weren't moderate either. They were like these absolutely asinine prices where you're paying $2.3 million for a home. If you want one, if you can afford one, good. If you can't, then it stays empty. And they literally have all these cities that are abandoned. For example, you guys may not know this, but there is literally a replicated city in China of New York. There is a British city that is replicated in China, replicating the streets of London or England. They have all kinds of stuff in China that are off the wall, kind of odd and strange. And now looking back on it, why I'm bringing this up, this is why we're in this position. Evergrande is defaulting on loan because they took all these loans to build all these cities only to produce GDP for the country so that the country stands up strong, propping up the country essentially. And now that they didn't sell any of these properties over this accumulated amount of time, they're going to default on a loan, right? And that's the big fear, that if they default on the loan and they go down, who out of the United States, which American companies, or the casinos, the Macaos, the Winds, the Sands, who has money wrapped up in them that's also going to be affected and bring them down, right? Because if it's a big player, just think of one of the big banks what has a stake in Evergrande, or think let's say one of the big corporations has a big stake and they go down and they're going to take this loss. it could potentially affect us in a more broad sense if you're looking at it from that. In case you've been wondering, I've been thinking about that and thinking about that and thinking about that, and now that article from Vice News makes a lot more sense to me. But again, that's neither here or there. Essentially, if you're interested in it, I would really recommend it. It's a super fascinating article. I thought it was funny or ridiculous that they built these ghost cities and that they have them still today, actively today, in China, that are literally abandoned. But getting further into our plays, we'll jump topics. As you guys see from the chart, this is AMC. And this is where we are at current day. As we do remember from Monday, we had this gap down essentially, where we hit our $40.14 essentially line of support, broke through today officially, and now our next line of support we would be looking at is down here at the 35.19. There's no need to bullshit anyone. We all know what it is. You've been in this play for 9 months. You legitimately had a baby already named AMC, and you'd still be in this play, and that's okay, right? Because the thesis of the play is what? It's a short squeeze, which means what? We are squeezing shorts out of this play. How much time is that going to take? Well, from day one when we got into this and you pulled the trigger to buy shares, you knew firsthand. Nobody knows. That's the one variable nobody can answer, is when or what. Everyone has been extremely excited about this pullback, to be honest, in Twitter. You go on Twitter and you see people raving that the market is pulling back. Because why? For those of you that don't understand or are new to the market, why is that so important? A lot of the hedge funds, or essentially the top 1%, essentially own 80% of the stock market. So when you get these massive pullbacks, all their big players lose money. When their big players lose money, their portfolios lose money. When they accumulate too much risk, whoever's holding that risk can say, hey, you're going to have to close out this position, tap them on the shoulder, which again, as we all know, is what? A margin call. You get margin called and they force you to cover that position. That changes the dynamic. Obviously, the biggest short positions are going to need to be covered. We already know AMC is a very substantial position of short. Again, we can verify that through multiple sources I've showed you guys over the last month and a half, essentially. My preferred is Lucid Tracking. Again, that's a one-stop place you can go to see ETFs and also meme stocks, but especially short positions. Again, from the last time we looked at this about a week ago, where we were in depth looking at it, we were at 93 million short shares. As you see, now we're at 95.9. So that's been increased by 2 million shares. Looking at the chart specifically, it is clear as day. They are taking advantage of not only the selling period that has started in the MACD, this downtrend on the RSI, but they are also shorting it. With the market spooked, they're taking full advantage to try to recover some of those losses that they've been taking. Because again, as we've done the math, it is literally costing them $2.5 million a week to hold, estimated, this position short. So keep that in the back of your minds. I know nobody likes a red day. Nobody likes a red day in your portfolio, but they happen, right? Again, you're not really down. You're just down on paper. You hold a position long enough, eventually you may not be or down as much, right? And again, it's always something you need to remember when you're trading in the stock market. That's the whole point behind why I've said when you trade, you need to trade controlling your emotions and not letting your emotions control your decisions, right? You don't want essentially to be forced to make a decision. And that's really how you should see it. When you see things like this in the market, where you see them pushing the price down, forcing it down, shorting it down, irritating you, angering you, essentially what they're doing is they're literally trying to put you like a puppet on strings. It's like, come on, sell, sell, sell. You're ready to sell. You're sick of this, sell, right? But we all know better. Like, what they don't realize, or maybe they haven't realized, or maybe they have, or maybe they don't care, right? They're making every single one of you guys better traders. You're becoming more patient. You're becoming more knowledgeable. You're becoming more understanding into what the market trends can do. You're becoming more knowledgeable with your tools and indicators. At the end, when this is all said and done, they're literally going to create sharks that are going to now swim the waters of the stock market. And again, that's to their disadvantage, because they don't want educated traders, because then we know how to play against them and we have more numbers. There's only 4.1 million retail investors in AMC. There's 330 million Americans in the United States estimated, right? Or more. Just imagine if we had 50 or 60 million people invested in AMC. This would be a no-brainer. Like, they wouldn't have a choice but to cover, right? Again, we have small numbers. Well, we have a significant amount of money and a significant amount of this position. As this price is being dropped, we're buying the dip. Everyone is adding positions as best they can. And again, it might be or might work out where this decrease that we see is just going to get bought up, and more of the position, or the main position of AMC, is going to be held by retail investors. So again, you got to remember, it's all about how you choose to look at it. You're either an optimist, glass half full kind of guy, or glass half empty, right? Me myself, I'm a glass half full. I'm always trying to be as positive as possible, and I want to convey that message to anyone who is interested in seeing that, right? But to give you guys an update on some of our other plays, something I've been looking at, Smile Direct Club is another short squeeze play, as you guys did see, or if you did not see, from Lucid Tracking. You see they have now taken the #1 spot with 34.2 million short shares, essentially 33% short interest, which is substantial. They are getting a lot using my favorite tool for unusual whales, SDA, Smile Direct Club. As you see, they've been getting high volume. One thing noted that I've explained to a couple people from what I've seen, there is a lot of essentially money going into this October 15th strike date for a lot of these short squeeze plays. And again, leave me a comment down below if you think you've noticed the same thing. But literally anything that's been essentially shorted a significant amount, you see significant amounts of money going into this specific date. As you see, the 6.5, the 7, and the $8 strike are the ones that are being heavily played. Pretty substantial amounts of money again for this one. If we look at another one, BBIG, this one again has had a lot of money going into it. Again, for the October 15th strike date, I can show you guys looking at the breakdown. As you see, October 15th has just a significant amount of money going into it on the calls. Obviously this week's, right? But then also the November 19th. Looking at these strikes, which ones are being played, as you see here, the 7, the 8, and the 10 are the ones most heavily played. Looking at this list on here, we have IRNT. We can check that one real quick to give you guys a quick update on it. IRNT. Again, same situation. See this October 15th, as I was saying, pretty much anything that's been shorted with a substantial position is getting a lot of money going in, from what I've noticed on this October 15th strike date. And you see it continuously being bought up and bought up and bought up. This one has a big put position coming in, obviously, because it's already had a run up. Which one is the other one? This TMC. This is the one that's been talked about a lot on Twitter. TMC. I'll make a video on this one tomorrow, specifically talking about this one. Someone also asked for Riot and Mara, so I'll include that one in tomorrow. But again, as I've been stating, October 15th. As you see, these strikes are being heavily played and targeted. I'm not sure why, but I will get to the bottom of it eventually, because I will find out, because I am super curious. As you see, October 15th being the highest expiration date being targeted at this current time. No date in September. For the strikes, the 10, the 12.5, and the 15 based on unusual whales. And again, if you guys don't have unusual whales, I strongly encourage you to look into it. It is a pretty amazing tool. These are the pricings if you guys are interested. Please do look into it. It does come with an amazing Discord with a lot of amazing traders. It's a lot of helpful, resourceful information that can help with your conviction in plays. Otherwise, you can always tune in to the Stock Hustle channel, and I'll teach you this hustle the best I can and make sure you can hustle as best as you can. But anyways, guys, I think you guys get the point. As always, please leave a like or a comment down below, as it does help with the algorithm. As always, please do subscribe, as that does help get the message out to more people. And I'll catch you guys in the next one.